I think everybody also got.
All right. Let's start with S&P 500. So we had this H pattern, okay? And this, as I said the last time, this low was a, shorting below this low was a bad idea, which it was. So it went up 1, 2, 3, 4, 5 or 6 days up. Then it started moving lower. Actually, this is not a big push higher. If this was a bottom, that's what I was expecting, that this Thursday low could have been a bottom. If that were the case, we wouldn't have seen, I'll show you the volume, but we wouldn't have seen the distribution days, after the 4th day. So this is 1, 2, 3, 4. I think this was a distribution day, or this was a distribution day, I think, or both of these. So, I mean, it went down with very high volume. You should not see any distribution days after the 4th day. And we did. And that's one of the reasons I was way too cautious. And when you are expecting the market to break out, and if it breaks down, a lot of people are trapped right there. And I would think that, all those people are getting out today. Whoever got into this move higher, they are all getting out today. Let's go to NASDAQ. NASDAQ is probably the worst. I mean, the amount of retracement it had was not that big. Let's see how much this retracement was. Well, it went to 61%, yeah. But overall, in the first leg, the retracement was small, and every time it bounces much. The bounces are much smaller. And well, I think I might have deleted it, but I was saying that you had 1, 2, 3 tests of this level, and the 4th day it actually moved higher, and it retraced well right away. This is like a failed breakout. This is not really a breakout, but it was trying to break the resistance, but it came back really fast. That's not what you want to see. And Friday was a follow through, and that was it. Okay, now all these guys are getting out right now. Of course, we can always figure out a reason why things are happening, but I would say the market already knows what could happen over the weekend based on the move on Friday. If you make your decisions based on what the market is telling you, you don't actually need to look at the news at all. Because for retail investors, we don't get the news as fast as all the institutional investors. Now look at, so one thing that I was just talking about before I started here is that there are 2 targets right now. Let me get rid of some of them. Yeah, we might need this one. Yeah, so when I posted this on Friday, I think, or Thursday, when this channel is broken, the next possibility is to come all the way down to 3640. Let's see how far it goes, but break of this channel was a big bearish sign. And the other thing that I was talking before we started is what are the things that we could expect. And this is 2018 correction, which started with a scare of interest rate hikes. So this was the first leg. I generally use this. So this was the first leg, and I used the 61 Fib as the first part of the leg, then the higher probability is for it to go all the way down to 2334. Again, as I was saying, this is not an exact science, but I have seen this happen again and again. So I do use this. I mean, when I look at this, when I perceive how far it could go, this tells me, how cautious I should be. I mean, if we don't know, if we cannot project where it could go, it's hard to, come up with a consensus or a decision what kind of position you should have in the market. I'm going to the 2008 correction. The same way, from here to here is the first leg, and the expectation is it would come all the way down to 716. Let me remove that. 716. Well, I mean, it went down a lot. That was a very, very, very big correction. So based on these moves, yeah, we could go all the way down to 3640. No, I'm sorry, not 3640, 3280. Again, this tells you how far it could go, but whether it goes there or not, nobody knows. We are just projecting it, and we will see one day at a time, based on how the market reacts every day. And and one of the, and I also wanted to talk about the message. I'm sure some of you are scared about the message that I sent on Friday saying that, brace for impact. One of the reasons is the moves of these fertilizer stocks. CF went up a lot, Mosaic went up a lot. I mean, I saw this, we traded this, but I was not watching the wheat. Okay, the wheat is up what? More than 50% now. That's 840 to, what is that, 1290. I think because of these big moves, they might have been halted in the exchange. I think that's what happened on Friday. That's what happened today, it seems. But we have seen this happen before. That was your 2008 correction. This is what alarmed me, saying that, okay, I have to be careful. Okay, reduce the positions, and not just this. And this is one of the reasons I sold my Bitcoin and everything. If you can stay alive during this market, you can always make money. I mean, Bitcoin goes up a lot. I can always, get back in when I feel comfortable. That's one of the reasons I got rid of all my cryptos, except some of my Ether that has been staked, and there is no way out for me there. So, any questions so far?
So why wheat moves so much?
Well, I was reading about it. Looks like Ukraine and Russia are some of the biggest producers. I don't know the ranking, but looks like they do.
Okay.
And most of the time, we wouldn't know these things until something like this happens. We won't look for information. And this is the oil stock. I was saying above 120 would be, it would. The last resistance we had was at, what is that? That's around 115. And I was expecting that this also happened on Friday, right? So I was expecting, so when there is a top, right? When you get a move like this, the next day you would see a move below that. Okay. But that's not what happened. And it started moving higher on Friday. That tells you, based on that price action, that it's not done going higher. So there you go. It went all the way to 130. And there is a very high probability that, this, I don't know if this is going to get settled soon or not, but I don't want to be too long on oil stocks either. I'll probably still trade options, because if there is any resolution to this, even there is a hint of resolution, this will go down really fast. So yeah, if there isn't any resolution, the next move is towards this 147.27. Let me put a alert in there. So this could go all the way to down to 147. And this is based on what I read. Anything above 115 or 120, every $5 is going to slow the economy a lot. The $5 move up in crude is going to have a huge effect on the economy. So let's see how that goes. So far, even today, right? I mean, you don't want to see if this is the early move for Google to move lower. I mean, if this breaks is 24.96, that's breaking the first leg down. That's it. So this could be much bigger move going lower. I mean, if you look at this, if this were your, S&P 500 or NASDAQ, you wouldn't be worried about it. This is like a very small correction and maybe it would bounce, but that's not what's happening right now. And if it breaks this 24.96, yeah, we'll probably see much lower prices. Let's look at gold. I think I already posted this. Gold is generally a safety trade. And I have mentioned this the last time. The big cup and the handle, even this is base on base, basically. This is a 11-year base, and you are getting another base here. So if you make this a monthly chart, this would be like a cup and a handle pattern, and now it's breaking out. And this could go all the way to 2,800. Again, this is only based on these charts. This might take 2-3 years, who knows. $800 move is really big. That's 40% from here, right? So that's a very big move, but that can happen. If these indices keep moving lower, that's the only safety trade I see. Of course, only until crude goes higher, the energy trade will be alive. And then I also posted this one. This is something I learned over the during 2008. I mean, you will see a deflation, and to stop the this is during inflation, and to stop the inflation, to curtail the inflation, Fed will start to raise rates until the inflation goes down. And they'll probably look for every month data and keep on increasing the rates. And there will be a point it will stop the growth, and the growth starts to decelerate. That's when you get this swoosh down. If there is no growth, there is no inflation. So that's what about crude and gold.
So KP, what is at the bottom, this graph?
Right here. Oh, this one?
Yeah.
That's an RSI, relative strength index, but
okay.
Generally this tells you if it is stopping or not. But in my experience, this can stay above 70 is overbought, but this can stay above 70 for weeks. So this can stay here for a while. You can use this, and I know not a lot of people are day traders, but you can use this for day trading. Every time it goes to 80 or 90, you can just get out. And if you want to, when you are ready to buy, this tells you to get out. Whenever it's high, you get out. And whenever it's too low, that's when you get in. But again, this is for day trading. People use it in 1 minute, 5 minutes, 2 minutes, daily, weekly, a lot of them. And most of the time, you won't get if it's a good stock, it never comes all the way back down. All right, let's look at financials had a big drop today. See, so these are all the sectors right here, right? XLK, that's technology, healthcare, consumer discretionary, communication, financials. So these are all different sectors in S&P. So if one sector starts to move lower, and if it has a higher weightage, the index is based on the market cap of all the stocks in it, right? So if financial starts to, so far S&P held well because of the financials. Okay, now it's breaking down. Right now, XLE is doing good, but the amount of, let me see how much it is right now. Credit studies. Yeah, I don't have it here. But right, XLE is probably around around 2%, I think, of all of SPY. So even if XLE goes up a lot, that's not going to make a difference for S&P 500. These are based on decelerating weights in S&P. So XLK is number one, and then comes XLV. So if the top sectors are going down, that's how it has been today, right? 3%. Well, again, this is from open, but let me open the sectors anyway. Hold on. So they went down. XLK went down 3%. XLV went down 1.74%. So these went down a lot today. So when this happens, obviously you will see a much bigger move in S&P. So today XLK is down big. That's because of technology. So this is if you are new to S&P 500 or want to learn more about this, I think you should first have a list of all these sectors. What I do generally is that I have a list of all those right here, and I have a separate screen for that. So I have all these. Let's say if I'm seeing weakness in XLB, I look at the weak stock in XLB and I go short on it, and the other way around too. If XLB is really doing good, I want to buy one that's stronger in the sector. This is how I find most of my trades, even in my research. But I would say make a list of this. This will help you a lot in the long run and gives you a good perspective of what's happening sector-wise in the market. So let's look at each sector. This almost always looks like NASDAQ. So XLV. Healthcare was doing okay. I had that. I saw UNH too. See, it was about to break out. See, this is a sign of a bear market. Every time it tries to break out, it's being sold. That's what happened. Anthem for me today. Okay, and what was the other one? Dollar Tree. I thought this was gonna break out and move higher. It did not. And JBHT. This is a transport. The other two transport that have worked well for me is UNP and CSX. But look at that. It tried to break out and started moving lower. So this is not what you want to see in a good bullish market. These are the signs. This is one of the reasons you should get out when things are not working. And today, DE was another one. That looks like a very good breakout. And look at how it's squatted, and that's a bearish engulfing. This took out 2 days, almost 2.5 days of move. So there is a good possibility it's coming all the way down. I wanted to get some puts in this one, but I already have too many positions. What else? XLY. This is consumer discretionary. This could just be because of Amazon today. It's down 4.9%, and Amazon was down 5.6%. Yeah, that's this. I mean, when I look at these charts, this is supposed to be scary. Okay, you cannot see the bounces fade so fast, and it's breaking. I mean, this was the Thursday, right? Yeah, and it's fading really fast. This was a big move, 29.72, 27.92. That's $130 move. It's been taken out now. Hold on, guys. Okay. What's next? XLC. Yeah, well, I mean, this won't be any pretty at all because of Facebook. I mean, Facebook looks horrible. I posted the chart today. I don't know how low this is gonna go. This is definitely scary. I wouldn't be part of. I mean, I was never involved even in this stage, but this looks horrible. This could go I mean, if we get a bigger move lower, this could go all the way down to 137, and that could probably an amazing place to get in. $384 to 187, that's 50%. And yep, that's 50%. What's next? XLF, we have been through XLF, and I think I also posted how bad it was in XLF. And one of the reasons I got rid of Berkshire is because it's part of XLF, and I didn't want to take any losses in it. And look at that. I mean, these look really bad. These charts look horrible right now, and they are just breaking down from their recent support swing lows. AXP was doing amazingly well during. Let's do a year. Yeah, right here. Look at it. It was going up very well, and this is what I was showing. I think during our last webinar, I was talking about this. We would see this follow through, and this could go all the way. This whole will be retraced, and I got out. And because of this huge volatility, if it doesn't work right away, sticking with it is so hard, because you would lose that 30, 40, 50% right away. So I got out, but I should have gotten in at least on Friday, when this was broken. And look at that. And this works so many times. I think we talked about this, how Macy's was one of them. This took out all these candles, and the next day, swish, move lower. So you get out when you get that next move, you get out. And it tried to stop right there at the 200-day moving average. Anyway, I mean, any of the XLF, they look really, really bad. Bank of America, 50 to 38. That's less than a month. I mean, things are changing really fast. If we don't pay attention to what's happening in all the sectors and all the, individually understand what's happening, we may not understand. I mean, these, because ES and especially ES, right? It is, even if there is a one small strong sector, that will counter this big move lower. We may not see this in ES yet, but eventually you will. So it's always good to look at each and every sector. And let's look at JPM was the worst, I think. Yep. That's a big move for a stock like JP Morgan, 170 to 130. That's big move. Morgan Stanley. These are all big companies in financials. Okay, we have a question. Apple, okay. So anyway, that's financials. Financials are looking horrible right now. XLI is about to break down, but I look at CAT. CAT is, oh, actually it bounced well. That's surprising. I saw CAT right here, but it bounced well. I think T is part of it. Let's see what's in XLI. Oh,
AP,
yeah.
a
Yep.
quick question.
Yep.
You are talking about the financials and they look horrible.
Yep.
And just before the war broke out,
Yep.
the financials were trending up based on the possibility of the interest rate hikes, right?
That's correct. That's correct.
And you just mentioned a few minutes back that even in 2008, when the correction was happened and the inflation, they were not under control, they were kept on raising the interest rates.
Yep.
So with these two things, why are the financials taking ahead when the possibility of interest rate hike is still very high?
Well, there could be number of reasons. I'm not good at fundamental analysis, but I'll tell you what I'm reading right now. This could be because of how much Europe will be impacted and the amount of exposure all these financials have in Europe. So that, I mean, even though the financials might has a positive effect of higher interest rates, the other parties, if there is no growth, they are not going to go higher, right? I mean, there won't be any business to do. So right now, what I'm reading is that the Europe might be in bigger problem because of this war. So did I answer your question? All right. Okay, so what's next? XLI, yeah. Well, I think XLI was able to bounce better because of these defense companies and Lockheed Martin. These are all part of XLI. CAT didn't do so well, and also the rails. But they turned around. I thought this would move higher, and after that, those are the rail transportation. This is the truck transportation, and I thought this would move higher too. That's why I got in today in the morning, but I got stopped out anyway. So I mean, I'm trying to explain my thinking process when I get into a stock. When I do my research, these are the things that I'm thinking of and expecting, certain kind of move. Next is XLP. These are staples, they'll probably do okay, and then they don't have a huge impact on S&P, but it might keep a little bit of, S&P alive because this is the safety trade. A lot of people will go back to XLP because no matter where the economy goes, people still have to eat. So,
Hey, KP. So there was a rally, or a bullishness in Kroger and some of those, retail stocks, right? So do you think?
Yep. Well, I don't know. Maybe not. See, one of the reasons that could be because of we were just talking about how wheat has exploded recently. Okay, and then that could be one of the reasons why. Not just Kroger, I think a few more producers have went up because of this inflation. But I don't know. I mean, I really have no idea whether this will go up or not. And anyway, even if let's assume they go up, the one thing that I would always think about is this a good place to buy? I definitely think it's not. That's a big move. Let's see how big was that move. So that's a weekly bar, 45 to 62. How much is that? That's a 37% move. Okay. For Kroger, that's a huge, huge move. That generally that probably takes a year for it to move, or 2 years. So, so generally when you have that kind of explosive move, it's a bad place to get in. So, okay, I'll tell you why many of the retailers get caught in moves like this and end up taking losses, because they are buying it not based on the charts, not based on the research. Okay, if the best place to buy this one is probably right here at 46. But I mean, I wouldn't buy it here anyway, because I don't buy stocks like Kroger at all, because they barely move. This is an exception, of course. Or when it breaks this $50. I mean, even if I had a alert here, I wouldn't go buy at 52 at all, because the risk reward is very high. The risk that I'm taking will not be paid for a stock in Kroger. So yeah. So based on the news, if you buy, or after it moves, if you buy, yeah, you will get caught, and you will be in trouble. And this is not a growth stock. This is just panic right now. And based on how all the commodities are moving, and today most of the commodities started moving lower. Metals and minor, look at this move. Okay, from 48 to 60. That's an ETF. That's not a real, that's not even a stock. And many of the, so when today is probably the worst day to buy any of them. The only thing that I saw is that Halliburton and SLB. So even in energy, they have different industries in that sector. So these haven't had that explosive move like Occidental Petroleum we had last week. So I think these still have a little bit of more move. That's why I bought some of this, and I did not get out because they are still holding well. But basically, what I'm saying is, if the move has already happened, I won't even think about it, because there would be more sellers on any small move lower than buyers. All right.
KP, what do you think about Airbnb and Starbucks?
Oh, yeah, I was watching every day. Look, I was watching Airbnb. I had this for my pre-IPO. I bought it and I sold it a long time ago. But they look horrible. They don't look good at all. Let me see. Yeah, there is a huge support at 130 for Airbnb, but that's a big move from 190 to 130. If it breaks 120, this could be in big trouble. Even if it breaks 130, this could be in big trouble, because you have all these buyers. They are all losers as soon as this breaks 130. And for many of these guys, I'm sure 130 is their stop. So if it breaks 130, yeah, this is in trouble. Let's look at Starbucks. Whoa. I think, yeah, I was just listening in CNBC about how Starbucks and McDonald's, yeah, these don't look good at all. I don't know. Maybe this is telling us a story. Maybe, Europe is in trouble. I mean, they all have big presence in Europe. So the next support would be 82 and 79, and probably 71. Yep. They have exposure to Russia too. Yeah, but I don't know how big their exposure could be in Russia. But anyway, it doesn't matter what their exposure is. I mean, charts look horrible.
Can you look at Shopify?
I was just talking to somebody about it. It broke the biggest uptrend.
Yeah.
Okay, and that's a very, very, very long. they should have held no matter what, that 593 level. It's this is scary.
I sold it on the way up, like it, at 400 and 1,000, then
Yeah.
didn't stop at all, like on the way it going up. So it just came down.
Yeah.
Thinking about a good point of entry.
This may not be the next big leader at all. A leader will not be sold like this. It lost 70% of it. So for this to turn around, it could take 5 years.
Okay.
So generally only 7% of the leaders that go down will turn around and become a leader. So the chances of you finding a leader among previous leaders is only 7%. So yeah, but anyway, to talk about where the supports are, I mean, I still don't know what to say about this. 400, 440, 310, these look horrible. I mean, the highs is at 1700. All right, what's next? All right. Let's look at.
AP, what about auto zones and the CMGs?
Hold on. I'm going to go through them as soon as I'm done with the.
I'm just generally also when we talk about the leaders.
Yeah, there are no leaders. Believe me, there are no leaders right now. I mean, all I am doing over the weekend is looking at everything. The only thing that I'm seeing, the top 10, top 15, maybe even top 20 are either fertilizers or oil or energy stocks. Nothing else shows up in my list at all. Next, let's look at utilities are actually doing very good. Oh, they hit a new high, looks like. Hold on. Yeah, they hit a new high today. Obviously, people, if they don't want to hold on to the bonds, this is where they would go for, dividends and low risk trades. What else is XLRE? REITs are doing anything under 200-day. I won't even think about it for a long. XLB materials, yeah. Today materials got hit big. What else we have in material? Sherwin-Williams. I had the alert today. Yeah, I mean, look at that, 350 to 240 this year alone. That's not a good look at all. Actually, obviously, energy is still doing okay, but it might be a little overextended. It looks like every time you get a pullback in energy, now probably a move to 70 is probably a good trade, because every time there is a kind of a correction in the general market, XLE is coming back to the support, and then it starts to move higher. That could happen again. All right, I'm going to go through these tickers. Target. Well, obviously retail is not doing great. Yeah, well, it's in no man's land. I don't know what to do with it. I won't buy it or sell it right here. Target, NVIDIA today was not a good day. If it breaks at 208, this will be in trouble. Maybe you have a little bit of support at 197. But when you have so much of supply right here above and breaking down, this, how much is that? $12 may not be a big support. It will probably come down to 178. Let me have an alert there. Actually, 178 looks pretty good. Or it could come down all the way to 162, looks much better. That's the first time it broke out of the range. So yeah, 162 looks really good. Nike. I saw Nike last week while it was breaking right there. Yeah, I mean, this looks horrible right now. I think retail will have a hard time with everything, right? Because of inflation, their production costs will go up, and not everybody has the pricing power. Maybe Nike does. It's not going to be, well, the entire market is that way. Let's see where we can find the next support. Wow, that's a rounded top. You don't want to see that if you are long. We don't need that. Yeah, the next big support would be at 105. I think builders started moving lower too. So yeah, none of the builders look good right now. So it is so far away from 200-day moving average. And all this supply, yeah, it's gonna go much lower. Energy, we discussed energy. AutoZone. Actually, AutoZone is doing very well. Yeah. Yeah, let's see if it breaks the trend line or that 1806. Right now, I mean, I can only think of what can go down, not go up, because the entire market is that way. Apple. One thing about Apple, if you haven't been with me for a while, is that looks like you have some Apple event tomorrow. Generally, when the day of the event, generally it opens higher, and by the end of the day, it starts moving lower. And in this market, I don't know if Apple can survive either. And if Apple starts to move lower, market, these are the ones that are keeping the market higher. And once Apple starts moving lower, Amazon, and Google starts moving lower, yeah, but we will probably see much bigger moves lower, even for the entire market. So you have 157 is probably a good support, but I mean, it just went up. So yeah, it might break 157, and this 200-day was the support, so it may not be a support if it comes down in the next 2 days. Again, if you're new, what happened, the supports are any price support is better when they are far apart. What I mean by that is, let's say if it starts moving lower and if it goes down this way and comes to 138, then 138.21 will be a support, technically much better support than when it bounces off a support and comes back to it right away in the next 1-2 weeks. So this may not be a support if it goes all the way down to 200-day this time.
So hey KP,
Yep.
One question. So in this market, you see that some of the very good names got lowered, but if you see Tesla,
yep,
it's still because there is a big discussion on growth versus value, and people are either selling it to keep the value versus growth. So how is Tesla surviving?
Well, how, I have no clue. See, I mean, you can always find a reason why something is working and why something is not. But again, this could be just like any other stock, any of these mega cap stocks. None of them broke down yet. I mean, Google is still okay, Apple is still okay, and this is one of the biggest stocks right now. So that's one thing. If you're talking about fundamentals, I can think of a few things. I still don't think there is a lot of competition for Tesla. Okay, Right now, Rivian just said, they can't live with the prices that they raised their prices for like 12,000 a car. And there was a, lot of stuff that's happening against Rivian right now. And they said, okay, they are not going to increase the prices for the 70,000 reservations that they already have. That means that they're not going to make money.